debt funding and technical solutions have been secured for Mozambique's $2 billion Central Térmica de Temane gas power plant, which aims to become operational in the fourth quarter of 2021. CTT will be a 450 megawatt gas-fired power plant supplying low-cost, reliable power to the state-owned power company Electricidade de Mozambique, hope I pronounced that right, through a 25-year tolling agreement. Independent power producer Globalec Limited is the lead developer, along with its partners EDM, Sasol Africa Limited, and Electra. Big gas deals in Africa in a pandemic year. Good sign? Joining me to discuss this further is Ifeoma Fini, Debt Solutions team lead that heads oil and gas and infrastructure at FBN Quest Merchant Bank. Good morning to you, Ifeoma. Thank you so much for joining us. So, Mozambique made headlines back in July for the biggest LNG project financing deal in Africa to the tune of $15 billion, signed by oil major Total. Now we've got, this was just a couple days ago, a $2 billion gas-fired power plant project. So is Mozambique one of the better debt finance headlines to emerge from Africa in 2020?
Good morning, Rotas, and thank you very much for having me. Indeed, these are significant projects which are coming at a time where major operators are pulling back their investments and stalling projects. So what this shows is two things. It shows the commitment of the Mozambique government to drive investment in its gas sector. We do know that there's another project which is actually delayed due to COVID, the ExxonMobil project, about $30 billion as well. So it shows that. It also shows that we can raise debt even in the midst of all of this in low price environments, and shows that capital will flow to well-structured deal. So for instance, in the LNG projects, we saw 19 commercial banks, 8 export credit agencies, and a DFI. And in the case of the gas project, we did see a number of multilateral agencies which typically focus on development aspects of the gas to power project. So I think in summary, what all of this shows is that once we can raise these large financings with tangible support and commitment from governments. In bringing it home to Nigeria, we did see that there was an LNG transaction that was signed, the Nigerian LNG project, $3 billion corporate finance facility earlier this year. So these big ticket transactions can be financed even in this kind of environment.
Fantastic. That's good, quite optimistic. I want you to help me out with how this Mozambique deal works. So, with respect to the $2 billion gas-fired power plant project, how does the 25-year tolling agreement work?
It's a good question, Rotas. So typically in power project financings, you would have the offtake contract, or what is called a power purchase agreement, which basically specifies the terms of purchase between the buyer and the seller. So it specifies things like the contract quantity to be sold, the payment terms, the duration of the contract, and such terms. So it's quite an important document, this offtake contract, because it forms the major building blocks upon which the financial model is built and the basis of project cash flows. So going back to Mozambique, in this case, it's a bit different from the power purchase agreement, where the national electric company is actually the fuel supplier and is actually going to also take the power to be produced by the generation company. So that's what the tolling agreement is. So what happens here is that the generation company is only bearing operating risks. Market risks regarding fuel supply, the sale of power is borne by the toller in this case. So what this does is that it does make it an attractive project for financing, because you know that you are assured of your stable cash flows going forward.
Fantastic. Thank you so much for that. All right. So for financial institutions like yourself that's structured these deals across the continent, I'm curious, when are the fees paid? Are they upfront, or are they baked into the repayment schedules for the deals?
Okay, so institutions like ourselves would typically be paid a financial advisory fee or a debt arranging fee once the transaction has closed and the finance has been raised. So we would typically charge for all the deliverables that financiers would need to actually fund the transaction. So things like building the financial model, preparing marketing documents like the information memorandum, teasers, the term sheets, helping with negotiation of the loan documentation, and just assisting in all aspects of the due diligence. So we would typically be paid, at financial close or during the transaction based on the deliverables.
All right, great. So that Mozambique deal in July, that was liquefied natural gas. Now we've got gas-fired power plant. Is that a sign that gas is more promising than oil?
So, Roses, absolutely. And we're seeing the trends today. We know that gas is cleaner, it's a more efficient fuel source. We know that it's more environment friendly. We know that for the same amount of heat, it does produce at least 30% less CO2 than when you burn oil. We're also seeing that financiers are moving, in this case where they're moving towards renewable energy sources and all of that they are now concerned with ESG requirements, that is environmental, social, and corporate governance requirements. And they actually take these decisions when taking decisions on their projects. So yes, we see that gas will be more, we will see a trend towards gas projects. I know that the Nigerian federal government is also looking at the commercialization of gas reserves, which will bode well for the gas sector.
Great stuff. Now, I know you're already at the top. First question I asked you, you said the Mozambique deal, mentioned Nigeria as well, encouraging, even though we're in a year that's been wrecked by the pandemic. But from your perspective with your debt solutions team, how would you describe 2020 for oil and gas deals, and how much of an impact did the pandemic have?
Yes, Roses, honestly, the pandemic had an impact on the sector. Definitely, we saw the fall in oil prices, which affected the sector. Coming back to deals, definitely, we just saw the recent NBS statistics report on banking data, which showed that at least 25% of loans were availed to the oil and gas sector. And this was basically due to restructurings, giving them moratoriums, helping to, extend their debt, given the fall in prices. So we did see a number of restructurings in the market. We know that promoters did stall projects because of the low oil price environments. However, we know that in this sector, government policy and the directives typically affect the sector. So earlier in the year, we did hear about the marginal field bid round that was announced, and we saw significant interest in the market from potential participants. So what you find there is that rather than going it alone, because of the price environment, their bidding strategies may involve partnerships to ensure risk mitigation in their deals.
Fantastic. So just following up on that, if you look at the impact of the pandemic on revenues for African nations, is there more scrutiny now on how nations can manage debt from these projects from your perspective, since this is what you and your team work on?
Yes, I think this is something that's very important. For oil and gas deals, risk mitigation is key. Given the oil price environment, definitely going forward, hedging contracts will become more important. In fact, we're seeing governments need to sort of move away from this reliance on oil and the diversification to other sectors, such as manufacturing and the others. So yes, indeed, we know that to the extent the government does save, it's more able to cushion the effects, of the reliance on these shocks to the economy. So increasing savings, diversification, and ensuring that risk mitigation measures are included in projects should help.
Great stuff. So based on that answer, how do you see 2021 playing out in terms of oil and gas deals for the continent?
So I think, like I mentioned, Rota, so I think next year for Nigeria at least, once the winning bids are announced, we should expect the players to be in the market to raise debt financing. We should expect to see, given across the continent, given the rise in oil prices or slow recovery in oil prices, we should expect to see more projects come on stream. We do know that the LNG project in Mozambique, again going back to Mozambique, was delayed in ExxonMobil, a $30 billion project. So that we expect things like that to come on stream as oil prices do rise. We also expect to see some activity in the midstream and downstream sectors. We've been talking about gas thus far, and we do expect to see a number of projects in these sectors as well.
Great stuff. Okay, optimistic. So let's keep that optimism going if we can. As I ask you about the petroleum, this is in Nigeria now, the petroleum industry bill, which President Buhari sent to the National Assembly back in September. Does it hold promise for future oil and gas deals in Nigeria?
Yes, Roses, I think all the industry players are anxiously waiting for the passage of this bill. I'll just go back and state that in terms of project financing, in addition to the project specificities and looking at the contracts, investors want to see, transparent framework policies that are in place before they bring in their investments. And really and truly, that's what the PIB will provide. It will encourage, investments in that sector. It'll make it more transparent, more accountable, and just to drive the investment. So I think we're all anxiously waiting for passage of that bill, and it does appear that this time around, it will be passed. Okay,
so we're waiting for the bill to pass for the last 20 years. Is there still any sense of urgency among players in the sector? Or maybe like for yourselves, you're a player in the sector as far as the debt side. Is the urgency still there, or are they just, if it passes, it passes? Or what's the sense?
Yes, Rotis, the urgency is still there. It is required, irrespective of the delay. The sooner it is passed, the better. We actually need to drive investments in this sector. It's important both for upstream operations, downstream, all across the value chain. It is important that it is passed as soon as possible to bring in these investments.
Okay, but has Nigeria lost time in capitalizing on the bill? We're seeing, as you mentioned earlier, other nations making a shift away from fossil fuels to renewables. I guess on the oil side, has the PIB missed the boat considering where oil prices are today?
Rosis, irrespective of where oil prices are, I think the important thing here is, when will that bill be passed, and that once it's passed, we should have a clear framework to drive operations in the industry for all players across the value chain. So yes, we do see that financiers and governments are moving towards cleaner energy fuel sources. In addition, the federal government of Nigeria is doing this as well, thinking about how to commercialize Nigeria's gas reserves. Whether or not we have lost time or not, we need that bill needs to be passed as soon as possible.
All right, only got a couple minutes to go. This isn't an easy question to answer, but still want to ask it anyway. What is your outlook for oil prices in 2021?
Rose, I think it's all about predictions, really, and what's happening in the markets. We've seen, the global shutdowns, and what has happened to oil prices. However, with the easing up of restrictions, we've seen a slight pickup. We've seen the positive news of a vaccine, OPEC production cuts. So we've seen a slight uptick in oil prices. So, our analysts predict that it will average in the range of 40s to the early 50s. And along that range, given the news in the markets.
All right, great stuff. A minute to go. If a shift in renewables, just to throw this in here, does that still bode well for you and your team as far as the deals you're structuring? It's not like you would be sad over Nigeria shifting to renewables. That would still be okay for you and your operations in the sector, yeah?
Rotis, whatever energy source, we would still need well-structured transactions. So it definitely, for my team, to the extent we're moving to, cleaner fuel sources, we work on gas projects already. So we're seeing a number of gas projects. So we are excited about that. But for wind, solar, and all of that, I think Nigerians or financiers rather are looking for well-structured transactions to fund. And to the extent institutions like ourselves at FBN Merchants can structure these transactions, we'll be happy to fund.
Fantastic stuff. Ifeoma Fini, Debt Solutions Team Lead for Oil and Gas and Infrastructure at FBN Quest Merchant Bank. Thank you so much for talking to us about oil and gas deals in Africa and the petroleum industry bill, hopefully getting passed soon. Appreciate your insights, Ifeoma.